And on today's video, we're going to be talking all about taxes in your business. Now, this does apply to property businesses, and we have kind of geared it more towards having a limited company. But I think that there are some costs in here that you could certainly put through as a sole trader or a partnership. So this is all about how you can mitigate some of those expenses against your tax bill. So stay tuned, and we will be covering 10 fantastic things and ideas that you can talk to your tax accountant about. My name is Mark Ashworth.
I'm Neil Harding.
And welcome to Property Insight. Okay, so I need my glasses for this one. Property tax.
I'm going to put mine on as well.
Yeah,
I look more intelligent. There we go.
Throughout the life of any business, there are obviously offsettable, very legitimate tax reliefs that you can claim, but sometimes they're not always discussed with your tax accountant. Sometimes people just use bookkeepers and they get overlooked, shall we say. So we're just going to cover a few things that you may or may not know about. And a big one, and one that's been changed very recently, is pension contributions. So you can actually, and this again is particularly relevant to limited companies, where you can actually reduce your corporation tax bill by paying money into a pension on your behalf, so as an employee of that limited company. And actually the allowance now has gone from 40 to £60,000, and that's per direct or per shareholder limited director.
Per director, yeah.
So a lot of people tend to run their businesses and their directors with their partner. Neil does, I do, and so therefore, if you've got 120,000 quid's worth of profit, you can certainly pay that into the pension contributions to then reduce your corporation tax bill.
That's right, yeah. So a company can make an employer pension contribution to an employee, a director being an employee, up to the value of your annual allowance. So if you don't have any other pension contributions from any other source of income, like no other employer, and you don't make any contributions yourself, then your company can pay up to £60,000, and you will get corporation tax relief because it's a deductible expense.
Yep, there you go. And obviously it's up to 60k, right? So even if you've got 20k left over in your profit, you could certainly do 10k each, or just 10k on your own if you want, 20k on your own.
Yeah.
Fantastic. So the next thing is transport and travel. So when on business. So this is to do with paying for train tickets, motoring expenses, obviously fuel typically, which you would essentially recharge back. I use a really cool app called Mile IQ, which runs in the background on my phone. So it tracks all the mileage that I do in my vehicle, and then I don't have to worry about checking to see how many miles I've done. It just does it automatically in the background using the location services on the phone. Fantastic app. Obviously it's chargeable, which you can put against your business too. And yeah, so if you're doing 10,000 miles a year running backwards and forwards to your properties and viewing properties and all that kind of stuff, then at 45p a mile, that's 4,500 quid you can claim back off your company.
Is that a subscription app? Do you pay a monthly fee for that, or is that free?
Annual. It's I think it's about 30 or 40 quid a year, something like that.
Probably worthwhile. Yeah, it takes the admin headache out of it. Yeah, if you don't have something like that, you have to manually record a log of exactly what miles that you've done.
Yeah, which you can either do. I used to do it by looking back at my calendar, and I would always write down in my calendar where I was going, what I was doing. So, but it's a bit more manual, and it's certainly takes a lot of time. So if you can take the sting out of it if you're not claiming anything at all, and it costs you 40 or 50 quid a year for the app that does it automatically for you, then obviously it's well worth doing it, because you can make that claim and take that out of your profit for corporation tax purposes. So phones, mobile phones, virtually everyone's got a mobile phone, and if you have one and you use it for your business, then this exemption allows you to claim for using that. But there is a few rules on it, isn't there? Yeah,
there's a few specifics. So one is that the contract does need to be directly in the company name. So it's not enough for it to be in your personal name and then expense it through your expense account through to your company. The contract for the phone needs to be with your limited company. And also, if you actually purchase the phone itself, that needs to be purchased in the name of the limited company as well. But each employee or director who is an employee is entitled under the rules to one mobile phone. HMRC agreed years ago that an iPhone is a phone and not a computer, so that counts now. That was contentious for a while, but that's long since gone. And yeah, as long as another rule is as long as the personal use is, let's say, limited and not significant, because it ultimately is a business expense, then you're okay. And the limited company retains ownership of the phone, so it doesn't belong to you, but that's just a technicality that you do need to remember. But yeah, then that is expensible.
So interestingly, when you talk about personal use on a phone, so let's say you've got a business contract and it costs you, I don't know, let's say it costs you 20 quid a month, but you've got unlimited calls and unlimited texts and unlimited data. How do you determine what's personal and what's not?
I think if you've got a contract that for business reasons, because of the level of use that you need, that is commercially what the business has decided is a suitable phone and contract for you, then anything else that is there for free and not an incremental cost, I would say that probably HMRC would be comfortable that that's insignificant use.
Health checks. This was an interesting one here because I didn't realise about the eye test, but I understand that there is a health screening. So I've got written down in your very diligent notes here that the company can pay for one health screening and one medical check per year.
Yeah.
So would that be a health screening and a medical check is two different things?
Yeah, they are two different things. I'm probably not the best person to describe technically exactly what the difference is, but I think essentially one of them is to check if there are things wrong with you, and another one is to give you a bit of a sort of your body an MOT and check that you're able to, things like, I mean, I had one once with an employer that was a medical check, and I was doing things like doing 50 steps and this sort of thing, and can you touch your toes sort of stuff, which is a medical checkup. And yeah, you can have one of those annually without there being any income tax implications on these things, by the way. That on all the things that we're talking about, there's no income tax implications on these, there's no benefit in kind implications on these things, on these 10 things that we're going through. So they're not something to disclose as a benefit in kind, as well as being fully deductible for corporation tax. So they are win-win in tax world. So yeah, and then the eye test, you can get an annual eye test as long as you need to, if you need glasses for your work, which I do because I need reading glasses and I use a visual display unit or a screen or a computer. Most people do nowadays, really.
Yeah. If
you need glasses for that, then your employer can buy you a set of glasses because you need them for work, and that's expensible.
Right.
And tax deductible.
But I guess it's sort of one pair of glasses. I guess it's not like infinite, or...
I think one pair of glasses a year is probably where I would say, go. Yeah. That's fine. I think if you start getting 10 pairs of Gucci's every 6 months, then you...
And just to go back to the health screening and medical checkup, it's only eligible for the screening and the checkup, not for medical treatment itself. So if you do need to have medical treatment at some point and you decide to have it privately, you can't claim for that as your company. So interesting. So yeah, have a look and Google for your... I think the glasses thing is great. So there's obviously a lot of information online, so do check that out and check with your accountant too. Life insurance for employees.
Yeah, so this might be something for those in the corporate world. You might already have this life insurance, quite often say 4 times your salary, and in the event of your death, that's paid out, and you're not paying any income tax. That's not a benefit in kind to you, but also the company isn't paying corporation tax, so that's tax deductible for the company as well. So if you own your own company, you're a director of your own business, don't forget you can do that as well. So if you want a life insurance policy, especially if you've got one already and it's in your own name, you're probably missing a trick there. Put it in the company's name. The company can take the policy out and then you can expense it.
Fantastic. Working from home. So I work from home, you work from home.
Yeah.
And there is a flat rate that you can charge back to the company, and there are other ways of charging it back. So we do it in such a way where we have a percentage of the property. So we calculate a percentage of the property as to like a fair market rent, but we ensure that the rent that we charge back is only worth what it would have cost us in actual money. So there's no profit being made, it's just paying us back. So for example, a portion of the mortgage, a portion of the energy bill, a portion of the council tax, all that sort of stuff. And then obviously we work that out to be a percentage of the property. So let's say, your office represents 10%, then you can essentially add up all your bills and charge your company back 10%. You can charge more as a rent, but obviously then you would be seen to be making a profit, and therefore that would be taxable.
Yeah.
But the £6 per week flat rate, can you just, or is that pretty straightforward?
Yeah, it's a rate that's the rate that I use. You're absolutely correct in the way that you just described that. There are all sorts of more sophisticated ways of deducting an expense legitimately through your business for working from home. £6 a week flat rate is something that HMRC have said, look, if you charge £6 a week, then we're not even going to ask a question, as to what the methodology was that you used to arrive at that. That's fine. So I use that partly for that reason, also because it's just very simple to do, and it's a few £100 that you can put through the company perfectly legitimately. You can expense it or pay yourself an expense if that's the way you want to transact it. And yeah, so that's why I do it. But like you said, Mike, you can do calculations of how much square foot in your house is used for office space and apply percentages to then bills and so on.
I think it depends on what you're using and how big the place is, right? I mean, £312 a year for a small office, sounds pretty reasonable. But then if you've got a big property and you've got a big office and it costs quite a lot of money to heat, for example, then you might be wanting to do it the other way and do some calculations. But I mean, once you set up a spreadsheet for it, it's pretty easy to do on a yearly basis. You can do it annually. You don't have to pay yourself every single week, do you? You can just do it.
No, you can transact the expenses annually. Yeah, at the end of the year, that's fine.
So training, so ongoing training. So if you do any property training courses, which we hope that you'll get lots of information from our channel, of course. But if you do go on to do any further training, then they are all tax-free. However, there's a big caveat here, because if you are learning a new industry or a new trade and you're specifically starting out to learn that trade, that's not tax deductible. It's only tax deductible if it's ongoing training for a particular industry. So let's say you've started your property business, you already have one buy-to-let, and you did that on the back of doing let's say a £5,000 course, and you'd never invested in property before. That £5,000 essentially wouldn't be tax deductible. However, if you then went on a year later to do another course and that was £1,000, then that would be fully tax deductible. So it's obviously up to you and your accountant to discuss what you feel is the appropriate tax deduction to put through, I would say. This one I love. I'm going to let you talk about this because it's just put a smile on my face. And actually, as a photographer in my old trade, I used to photograph these often, and that is, of course, a long service award. So when you've been with a company for a long period of time, they will give you usually cash bonus, cash money, to say thank you very much for being an employee for this amount of time. Here's a nice cash reward, and they are fully tax deductible in your company.
They are. So there are, as with all these things, there's criteria which you need to meet. But the main criteria to keep in mind here is if you have been an employee for 20 years of a limited company, then you can charge as a deductible expense at the rate of £50 per year, so £1,000, the cost of a long service award, and effectively you can spend that £1,000 on all sorts of things, really. And that's per employee. So a director is an employee. If you're a husband and wife who have been shareholders and directors of your company, and it's been a trading company, you may well have had that for 20 years or more. So you're probably sat on an opportunity to expense £1,000 each anytime you like now, really. And again, it's something that quite a lot of the time accountants don't think about particularly mentioning to their clients. But yeah, it's absolutely doable. And also, I don't know if was this what you were about to say? So also you can keep doing it, so you don't have to just do one. So, but you have to wait another 10 years. So after 30 years, you can do it again. And then it's 30 times £50, so £1,500. You don't have to then deduct like the £1,000 that you've already expensed. It's not like then you can only expense £500 because you've already done 1,000. You've got another opportunity. So £1,500 each on year 30, and so on, like on year 40 and so on. So yeah.
Fantastic. So that's just a
wonderful
tip. As I have a limited company that will be celebrating its 20th anniversary in 2027. So I look forward to a nice little payout there. So annual party or events. So obviously as a director, as we've mentioned a number of times, you are an employee of your limited company, and the rules dictate that you're allowed to have an allowance of £150 per year for each employee. And this typically would be spent for a lot of companies at Christmas time, where they take their staff out for a party. It might only cost £75 a head, but obviously they can fully deduct that in their books, which also means that if you want to take your wife out, or your partner out, or your other director out, whether it's a business partner or whatever, you can go out and spend up to £150 either in one go, or you can actually split it up, can't you? So it could be one go in the summer and one go in the winter, but it needs to be a maximum of 150 combined.
Yeah, that's right. You maybe have a summer barbecue, as long as it's an annual event, you do it every year, and you can have a winter annual event like a Christmas party. Again, as long as it is an annual event and it's done every year, then there's no reason why you can't say, well, actually it's £75 for one event, £75 for the other. That's 150 or less in total. So that would work out fine. Be careful you don't go a penny over, because if you do, the whole lot's taxable on income tax, and it's not deductible anymore. So that's a bit of a wealth warning on that one. Other things to be careful of as well are that, depending on your business, so you may or may not be VAT registered. VAT might not be an expense to your company. Keep in mind that the £150 is an inclusive of VAT amount for the employee, because that's the value of the benefit for the employee. So sometimes people get tripped up by that and then fall foul of the, I've just gone a penny over the 150 quid and the whole lot comes taxable. So just keep an eye out for that.
Okay, so the next one is trivial benefits, and actually this is the 10th one, I believe. So trivial benefits, so these are little payments that you, or let's say if you're just liking it, I always think back to likening it like a company. So let's say you work for a corporate company and it's someone's birthday and the boss wants to buy that person a bunch of flowers, or someone has a bereavement and somebody wants to buy someone something for a bunch of flowers, or maybe it's a celebration and it could be the birth of a child, or it could be a birthday or an anniversary, or any of these things. And that company can give them a gift of up to £50. It mustn't be over £50. The transaction itself has to be £50 or less. They can buy their employees those items the 12-month period. There's a cap for directors of small companies of £300 per year. So that means that they can really only be a minimum of 6 transactions at £50, or you can have 10 to 12 transactions as long as they add up to only £300 and they're under £50 each. You can put those against the business. They can't be cash, they can't be alcohol, but they can be vouchers. So Amazon vouchers, Tesco's vouchers, any of these big corporations, John Lewis, things like that. So if you buy yourself vouchers, you can obviously then go out and spend those as you wish. So for someone that's got a limited company, that's £600 a year between the two of you, if there's 2 directors, to essentially extract from the company, and deductible for corporation tax, and a way to get some cash out of your business.
Yeah, brilliant, isn't it? And the main thing to remember is it can't be for some sort of reward for your employment. So bizarre, which is bizarre, isn't it? Because normally when you think about business expenses and what's deductible, you think to yourself, it needs to be something that's wholly exclusively incurred in the course of business, all that sort of stuff. Well, actually this one, bizarrely, it needs to be absolutely nothing to do with your role in the company.
Or your performance.
Or your performance related.
Performance-related pay, yeah.
Exactly.
I think that, the clue's in the title, isn't it? Trivial benefits. It's for trivial things. Yeah. I just want to buy someone a gift because I'm feeling generous.
Yeah.
So there we go. So if you've liked this video, please hit the like button. And if you haven't yet subscribed, please do so, because it really helps us bring you valuable content. So thanks again for watching, and we'll see you on the next one.